Welcome back, everyone. My name is Michael LeBlanc, Senior Portfolio Manager at Canaccord Genuity Wealth Management, and thanks for joining us again this week with Next Week Today, where we cover everything we saw in the market last week and what we see coming up as well. Just to keep you informed with everything that's going on, things you might want to be looking at in your portfolios, or other investment information that would help you through these incredibly volatile times. If you've been watching the markets at all, you would have seen a lot of ups and downs through January and continued into February. With that, as always, keep in mind that everything that we cover off in these videos are for information purposes only. Do reach out to us at mikeonmoney.com with any of your questions that we can answer directly towards your situation, your portfolio, or do your own due diligence. But these are educational. You can also find our podcasts and our previous videos at mikeonmoney.com and hopefully help you answer some of your questions. With that, again, I mentioned last week, we're kind of in temporary space here. So hopefully the audio and video quality is coming through strong enough. We should, it's a renovation in our office space. So hopefully in the next few weeks, we'll be back to our normal space. But we'll see. With any renovation, I never count on those dates. As always, we kind of touch on COVID last couple of weeks. We've been talking more and more high level. Really, I think it was in November, I said, I'm hoping to cut this particular piece out of the presentation. And I'm starting to get hopeful we can get to that again. Really, all I'm going to touch on today is, if you haven't heard, obviously, Ontario and Quebec have both announced that they're going to be lifting over the next couple of months the vaccine passports, kind of in stages, certain areas right away, or certain requirements right away, and then kind of restaurants and bars about a month later to get rid of the vaccine passports. Obviously, that means going back to full capacity and hopefully getting to normal, or whatever the normal is now. We also heard the federal government come out today, talk about lifting the PCR testing for flying. So right now, of course, if you fly out of Canada, you may have to do a test depending on where you're flying to. That all depends on to the destination country that you're going to. But returning to Canada, Canada had the rule that you had to have a PCR test, right? The more costly test and harder test to get to return back to the country. They're lifting that requirement, but you still have to do at least the antigen test. So the PCR test still works, but if you do the antigen test, which is the one that the US requires, that is good as well for Canada. Started March 1st. So if you're doing any traveling in March, or returning after March 1st, you don't have to do the PCR test. So there we go. We're supposed to also hear today in the next hour in BC. Rumors are out that the BC government is going to start lifting some of the restrictions. So hopefully following suit with, Alberta, Saskatchewan, Ontario, and Quebec have all started to lift restrictions, but also lift the passport mandates that are out there. So hopefully moving forward with things, as I mentioned in previous videos, other countries have already gone this route, the UK, Denmark, Norway, not everywhere. So, if we are thinking of traveling, the advice is still there. Really do your research on what the requirements are, both for the country that you're going to, and if you're going to multiple countries or stopovers along the way, make sure you know those. But also keep on top of things on the return. Hopefully we're headed the right direction here, and we don't take a back step again like we did in late November, December last year. So with that, let's take a look at what's going on in the economy. What we're watching for this week is the Producers Price Index for January coming out. Canadian housing starts for January. Also looking at quarterly results from Marriott and Airbnb. So we'll really start to see some of those numbers of who's traveling and in what kind of numbers. Stock futures rose today after pretty much a week of down days. We did see energy pull off a little bit this morning. We're going to talk about that. Mostly have to do with the Ukraine situation, and the bond sold off a little bit. Again, a little bit with the Ukraine. We'll talk more about Russia's pulling back some troops, a little bit more optimistic in their language as far as what's going on over there. Basically, Putin came out earlier today, indicating that there may be a diplomatic solution as opposed to war, and he was not in favor of going to war. So hopefully that happens. And what when we saw the effect of that is oil prices eased off a little bit, and that's just on, there's a lot of supply in Russia that can continue to flow to Europe. Also, natural gas flowing into Europe, which is a big thing. But they're also a big wheat and metal exporter as well. So all those things saw a little bit of pullback. Still having a great year or great last 6 months as far as pricing goes, but just ease off some pressure on that front as we see hopefully a peaceful resolution coming over there. And with that, of course, we saw hedge funds start taking a little bit of profit from their oil positions after a significant rally in those prices over the last couple of weeks. Nothing to be concerned of. There still is a little bit of supply crunch. Obviously, that supply crunch has eased slightly with Russia coming back online, or the potential of Russia coming back online. But that doesn't really fix the demand problem, especially as we see more and more people traveling. Because remember, that's where we're really using a lot of fuel. It's not so much cars; it's more transportation and planes. We're also seeing smart charging, kind of coming to the forefront to try to save the power grid from the world's EVs. If you watched the Super Bowl on the weekend, I did not, but if you did, you would have seen a lot of EV commercials, a lot of EV and a lot of crypto commercials. So there you go. But a lot of electric vehicle commercials, car manufacturers are obviously very committed to switching their lineup, or at least introducing a strong lineup of EV vehicles. But as we mentioned before, that increases the power demand on our electrical grids or power grids. And how do we manage that? So one of the key areas we're looking at is smart charging. Whether certain hours, peak hours, being able to, time when your vehicle is going to charge off peak hours, ease the demand on power grids. A lot of communities already do that. We don't have it here in BC yet, or certainly not in the area I live in, where, power, your electrical usage costs you more during peak hours and costs you less in off hours. So a lot of people might, set their dishwashers or washing machines to run at 2 a.m., which would be an off-peak hour, to ease the use of electricity. Well, the same idea with EV cars would be to be able to schedule them to reduce kind of demands on the power grids. Now, that's not going to change the demand on the power grid. Actually, I could do a whole video. Again, if anyone's interested, go to mikeonmoney.com. Let us know if you want to see kind of investment opportunities into the power grid and what the EV revolution, if that's what you want to call it, or the EV expansion is going to mean for our power grids, and where there's going to be a lot of investment happening to bring those grids up to the 21st century demands, and no more so than in the US. I mean, Canada's got a big way to go as far as that infrastructure goes, but even more in the US. And I can go into the ins and outs of that if that's something of interest to you guys out there. Do let us know. Happy to do that. With that, we're also looking at the job numbers. Record number of jobs switching is really pushing the inflation numbers higher. Of course, we've seen the inflation out there, but one of the big things driving it up is people switching jobs, looking for higher salaries. Of course, higher salary means higher costs for businesses, but means more discretionary money being spent out in the economy as well, driving up the price of goods. You've probably seen it. It's been going on pretty much for the last year. As much as we're seeing, we saw a lot of layoffs in certain sectors, hospitality and travel being a massive one. But a lot of those people, a lot of demand for people in other jobs, a lot of people upgrading their training for those jobs and kind of switching gears permanently. And if you've been out in public to any of the restaurants or hotels or anything like that over the last year or so, you would have seen not the lack of willingness to provide service, but the lack of people to provide service, just simply because they haven't been able to meet demand, getting staff back. We've been to hotels where room service just didn't exist because they didn't have enough staff to run the kitchen, or we've even seen some saying they're only going to have housekeeping every second day, simply because they can't get enough staff to maintain a daily housekeeping rituals or services out there. So we're seeing a lot of that. We're going to continue to see that, and we're definitely going to see that impact on the inflationary numbers, as long as we mentioned last week, as long as we continue to see those really low unemployment numbers. The Fed is still split kind of on that open rate bid. So, when they do that hike, which, is expected in the next, weeks, kind of early March, what is it going to be? Is it going to be a quarter point? Is it going to be a half point? How aggressive should they be right out of the gate? How gradual should they be? Should they test the water first? Should they know? Should they plant a stake, say, no, we're committed? It's still that not just how much the rate is going to be, but how many rate increases they're going to do this year. It keeps going back and forth. There is this kind of expectations that inflation is going to slow naturally a little bit as we clear up the supply chain issues. And once the rate hike comes, whether it's a quarter point or half a point, that it will actually slow inflation faster than expected. So still a lot of unknowns. I mentioned last week, if you're concerned in your portfolio, trim into the rallies. Don't go all cash. Don't try to time the market. Just sell a little bit into the rallies. Have the cash ready to deploy in the dips. To go back either to the same positions or other positions that you find provide good value in the pullbacks. But don't be shy about being more active in your portfolio this year. It's definitely going to be a year for that, as even the Fed doesn't have a solid plan around those interest rate hikes this year. Funds on the right side of historic bond markets. So what we saw is a lot of the hedge funds, or sometimes called smart money or first money, moving into treasuries. If you've been following our treasury yields that we touch base at the end of these presentations, they have risen quite high from about 1.4 over 2% today. And so the short end of the curve has certainly risen as interest rates have kind of flattened out over the longer term, and that's what happens when we go into this high inflation interest rate rising market. We're just hoping that curve doesn't invert where we go into a deflationary period. Goldman Sachs is also cutting its S&P 500 forecast. So currently trading just over 4,000. They're forecasting it to finish the year under 5,000 as those inflationary concerns continue to rise. Again, this just goes back to what we covered last week, and what we're talking about today is be more active. A lot of the returns are going to come in the portfolios by being patient. Going with the tide, as it goes up, trim it out a little bit. Don't be afraid to miss the top. You're never going to get right at the top, and you're never going to buy right at the bottom. But if you're being smart and just trim it a little bit into the waves, and then waiting for the tide to go out and buying a little bit back again this year. It's not a daily thing. It could be over several weeks, over several months. We really don't know how that's going to play out as the Fed is still trying to figure out what their plan is this year. So with that, let's take a look at what's coming up this week. We've got the Senate Banking Committee getting ready to vote on the Federal Reserve nominees. So really the people who are arguing about what the interest rate hikes should be and when. We got the economic calendar with the Labor Department expected. As I mentioned, the PPI numbers coming out. We're looking for a small increase in demand over the December numbers. The 12-month trend is expected to be around 9.1%, excluding food and energy, which is funny that they exclude food and energy, given that's probably what affects us the most when it comes to where we're spending money. And obviously, we're looking for about 7.9% overall, right around the inflationary number we saw is about 7.5% come out from those numbers later this week. And also the Empire State Index, which is the kind of the current business conditions, is likely to advance a bit after it pulled back a little bit last month. Marriott is expected to come out with some better fourth quarter numbers, as I mentioned, Airbnb as well. Just as people started to ease back into traveling, these are early numbers, as there has been, we haven't seen a big explosion in travel. Certainly seeing more and more, definitely within countries. People traveling more in Canada and in the US. People getting out more and traveling more. International is just kind of starting to pick up again, and we're really going to see that into 2022. Do let us know. I'd like to hear from you guys as to what your plans are for this year. Are you feeling comfortable about going out and traveling again? Are you going to hold off to see where things stabilize? Obviously, the big thing right now for most people that we've talked to is not so much fear of traveling, but fear of being able to get back, right? Having a positive test when you're outside the country and being stuck somewhere, or the rules change when you're outside the country, and how do you get back in? Other U.S. news: AMD, the chip manufacturer AMD, is closed its record chip industry anyway deal with a $50 billion purchase of Xilinx. The chip market is continuing to be a growth or big demand industry, as really, yes, partially caused by the COVID shutdown, which caused this gap in supply that hasn't been caught up yet, but also the expansion of where we're using chips, right? Like, if you think, I was talking about cars being a primary example of that. At one point, if you're as old as me, at one point your car didn't have a chip at all. And now, it can have dozens of chips in there running everything from your computer system, your engine system, your fuel injection, diagnostic systems. And then that's where we're seeing shortage in car deliveries these days, because they can't get those chips. And of course, it's going into all our phones and our computers and our appliances, and pretty much anything we have these days have chips in them. And that backlog is not going away anytime soon. We're seeing more and more M&A and changes in the chip industry. Just last year, of course, Apple coming out with their own chips, stopping the usage of Intel chips in their products, and others like that. Johnson & Johnson is going through a little bit of a legal battle here. If you haven't followed this goes back a couple of years. Johnson & Johnson's talc powder, baby powder, there was potential cancer causing products inside the baby powder. So there was a class action lawsuit. Johnson & Johnson, much like a lot of companies, especially in the drug industry or healthcare industries, we saw it with Purdue Pharmaceuticals, where the subsidiary company that produced and sold that product, they wrap it up under a bankruptcy to limit their exposure to the lawsuit. So there is a large payment that happens, but anything beyond that kind of payment is covered by the bankruptcy. So that settlement deal, the bankruptcy settlement deal, is under the microscope in the courts to decide if that's legal and in the best interest of the plaintiffs and Johnson & Johnson. And in no surprise, we have to have news every week about the tech sector being sued by someone. So Texas is suing Meta, which is Facebook's parents, over facial recognition practices. So basically, Facebook using your photos that you upload into Facebook to gather facial recognition data. Not necessarily, the lawsuit's not necessarily about Facebook using that data, but simply collecting it for obviously either future use by Facebook or to sell it to some of their customers for their use. So Texas state is claiming that it was done without consent, so there was no disclosure of that. So we'll see how that plays out in just another lawsuit, whether it be Google, Facebook, or Apple, Microsoft, around privacy issues and antitrust issues. Brazil oil, Exxon can't seem to find it, but Brazil has it. So ExxonMobil has put a big budget behind offshore drilling in Brazil to try to expand their production and supply out of the country, or their offshore resources. It abandoned it years ago after having some struggles, but now they see it's key to their future. So we'll have to see how that plays out over the coming months. But of course, Exxon just coming off a record quarter as far as profitability goes. Ford is suspended or cutting some output to its plants in Ontario and a few others. Obviously, this is all around the chip shortage. They can't build the cars without the chips, so they're shutting down production until they can shore up some of that supply and get the plants going. And if you're out there trying to buy a vehicle right now, you know this. It's not just Ford. Trying to get a new vehicle coming off the assembly line these days is a long way out. I've seen some models, I've heard of some models, being a year and a half out. Other ones being anywhere from 4 to 8 weeks, and then some other ones anywhere in between. So this is going to continue until the chip manufacturers can catch up with the demand, or demand slows down. And as of right now, there's no signs of slowing on the chip front. On the dollar front, the US dollar fell a little bit again on that kind of the Russian President Vladimir Putin signaling he's open to diplomatic solutions for the country. Obviously, we'd seen a run up in the US dollar. It's the flight to safety dollar. So whenever the world gets concerned about global economies, money flows into the US dollar. That's natural. We also have, of course, the interest rate hike pending in the United States, which drives money to the US dollar. But a little bit of that international money pulled back out again, just as the fear of the Ukraine crisis kind of eased off a little bit. As I mentioned earlier, the US 10-year Treasury notes rallied to over 2%. From 1.99 on Monday, and that's just again signaling that rate hike that we're expecting here. Might be closer to the 0.5% right out of the gate. We're not sure. And then the European Bank is still intending to reduce the monetary policy accommodations in the coming months. So they're also facing a bit of inflation, not as aggressive as the US. Given their markets, and of course they still have the Brexit plans going on over there, so they have to be a bit realistic as to what they can do. On the commodity front, as I mentioned, oil, natural gas prices slumped a little bit off the Russian news, and when I say a little bit, oil fell to below 90 to 89 and change. Still a really strong number. And again, we don't see that pulling back a ton from there, but there had been that rally up in the last couple of weeks with the Ukraine crisis happening, and same with natural gas, as the hope that natural gas will flow again from Russia into Europe. So with that, that's what we have for you this week. As always, visit us at mikeandmoney.com with any of your questions. Let me know if you want us to take some deeper dive in some of the topics I mentioned. If you have any other topics that you might be interested in, and any of your comments or questions at all, love to hear from you. Other than that, we will talk to you next week, and we hope to see you there again. Thanks. Talk to you soon. Bye-bye.